Good morning, everybody, and this is your S&P 500 day trade setups for today. So the Feds have finished their song and dance, and the net result is a very juicy inverse head and shoulders. So you can see shoulder, head, shoulder, and with the oscillators crossing over on the 8-hour and pointing up. This is a beautiful setup, people. I can't stress how fantastic this setup is. So 4720 is basically the area we need to clear, and you can see we're sort of bouncing off it at the moment, but we need to clear it, come back and build some structure here. So this is something which we really need to watch sort of very closely. The only thing that's going to null and void the structure is a break below the head, which is here, and that is 4,500. So a break below 4,500, that is sort of last line of defense. Okay, so just have a look at the 3 hour. No real difference on the 3 hour. Kind of below the moving averages, but we didn't get a crossover. And it's always an indication that you need to be careful. And this little squirt, the noise that came out is exactly what we're expecting. All they've said is that they'll finish their bond buying. So they finished their bond tapering program by March, and there will be 3 rate hikes next year. So that was the bad news that the whole world has been waiting for. And if you just trawl through YouTube, you'll see all the doom and gloomers who forecasting the bottom to fall out, the market to crash, and why you need to get out of it and why you need to be short. And there's a lot of people that took that literally and would have been short and sort of somewhere in this area here being short and being very excited about the fact that they're profitable, and they'd be waking up today looking at their trades and thinking, how do I get out of it? And hopefully, this was stops as well, so people who had stops in. And that's one of the reasons why I don't trade the S&P 500 to the downside. Don't bother shorting it because it just doesn't fall. It's in a long-term uptrend, and there's no indication that uptrend is coming to an end. So anyway, enough of my waffle. If you look at the hour, you can see we had 2 hours going into close of solid moves to the upside, and we are testing this area here. Now, I would like to see a break of that or a retest down at 4,700. You can see there's quite a bit of structure at 4,700. Worst case scenario would be a move all the way down to this area here. I say all the way down, but it's not that far, which is 4693. So basically, we want to see the oscillators ease off a bit. They're oversold at the moment. So you want to see that come off a bit. You might see that in the European session where we just drift sideways, and then watch the US Open for a break above 4720. Break above that and retest that area. Definitely long, and I'll probably be long before the weekend as well to hold that on for this beautiful, juicy setup that we have here. And let me just give you the scenario that we are looking at. We are looking at 4,900 basically. So it's a 2,000 point gain, 4% move. But, 50,000 is closer as well. Whether we shoot that high is another story. So that's the one setup. The other thing is that we don't get above this area, then obviously there's a very good probability that we sell off. So I'm not looking to be long up here and then sort of make this into a bigger range. That is another probability. But what I'm seeing here, I don't think so. Okay. Anyway, that's kind of my view. Waiting for the breakout or the pullback on structure before getting long, possibly half-size position, because we anticipate leaving it over the weekend as well. And then we can always add early in the new week. Hope it helps, and we will catch up with you tomorrow. Cheers for now.